Hello, everyone. Welcome to another episode of NFA Live. It is wonderful to see you again. Thank you for joining us. I'd like to start off by can you please just acknowledge the color scheme that we've got going on here? This is wonderful. Got a bit of yellow going on, a bit of sort of pinky red, and nice blue there from Rob. I think it was Ben said we look like the Teletubbies.
That was not me.
Oh, that was not. Yeah, sorry. Credit to Rob for that one. Rob, I think you're onto something there. Yes, great to see you all. Thank you for joining. And of course, I will introduce my two guests, who I'm sure you all know already. We have Rob from Digital Asset News. Hello, Rob.
Hello, everybody.
It's good to see you. And we have Ben from Into the Cryptoverse. Hello, Ben.
How's it going? Good to see you.
Good. Likewise. Okay, so we will get into it. Before we start, though, if you don't already follow Ben and Rob, then smack yourself around the head for being so foolish. And then once you've done that, you'll find links below where you can follow them. So please do. We are going to talk today about, there's a few things we're going to discuss where the bottom for this cycle might come. We're also going to look at crypto's image problem, which I think was aptly demonstrated by all that footage of people booing the Coinbase advert at the Super Bowl over the weekend. And we're going to be talking a bit about AI as well. But first I wanted to kick off with this business about where we might be in terms of Bitcoin finding a bottom, because it seems like we're in that stage where we're kind of grinding lower, and a lot of people want to know where the pain might stop or where the pain might sort of bottom out. So I want to start with Ben on this one. Ben, I know you've done a video on this very recently, so you don't need to give us the whole thing, but a rundown of your thinking on this would be much appreciated. And then Rob, if you have anything to add after that, that would be great. But Ben, when do you think we could see a cycle bottom for Bitcoin, and where in terms of price might that bottom be? And obviously this is not financial advice, and it's impossible to call the bottom 100%, but any indications would be wonderful.
Yeah, there's a few charts I could show that might provide some insight. Normally, the bottoms occur when certain indicators sort of fire off. This is one of them, when the supply and profit and loss ends up crossing each other. Sometime after it crosses, that's where the bottom historically is. So this is one chart. In terms of time, I think that I would defer to like charts like this that show us the ROI from the low for the last several cycles. And if you extend that out to the next low, I mean, you can see how this cycle, this purple line, basically topped exactly when the last two cycles topped. Even though the entire time, a lot of people were convinced that the 4-year cycle would not play out, and it ended up playing out anyways. So to some degree, it feels like we jump through hoops to try to overcomplicate things. And then the whole thing just ends up repeating itself, regardless of the mental gymnastics that people want to take. And so because it topped at the same time, you have to at least wonder, is there a chance that it could bottom out at a really, really similar time as well? And if you were to sort of look ahead, that would roughly line up with the first half of October. So I think the first half of October makes a lot of sense. But with that said, we can also learn a little bit about the 4-year cycle from the S&P 500. And going back to the 50s, 60s, 70s, and 80s, I've pointed out, many times that we had 4-year lows approximately every 4 years, 1982, 1978, 1974, 1970, 1966, and so on and so forth, or 1962, and you can keep going back approximately every 4 years. And a lot of times the lows occurred in October, right? So you can see an October low in 1966, and then you can see an October low in 1974. But occasionally you get lows that occur in other times during the year. And 1970 was an example where the low actually was in May. So the reason why October is the most likely outcome is because let's just assume that the 4-year cycle remains intact, right? If we just assume that, then it would suggest that October is at least a candidate month. But if the losses accelerate, right? Like if we don't really get a bounce around 60K, I mean, I think a lot of people at this point were thinking like, all right, there's going to be a bounce to 60K and maybe there will be a larger bounce, but it really hasn't manifested yet. I mean, we're at 70, but that's not really much of a bounce, especially if you look at Bitcoin on the weekly, if you sort of, let me zoom out here. If you look at Bitcoin on the weekly, like no one would ever look at this and say, oh, this is where Bitcoin bounced in the future. If this is literally all we have, we just have a wick down and then it just continues going lower. So I think that if the losses accelerate, then you could have a low earlier, potentially as early as May. And MicroStrategy actually gave us a great example of that last cycle. MicroStrategy capitulated very quickly. And you can see that it essentially did bottom in May of 2022. It just swept the low about half a year later. But when the losses accelerated, it then allowed for the low to come perhaps a little bit earlier than a lot of people were thinking it was going to happen. So I think October makes the most amount of sense, but I would start looking for a bottom potentially as early as May, depending on how this plays out. And there's a couple of other interesting things. Last cycle, it took MicroStrategy 98 weeks to bottom. 98 weeks from this cycle's top for MicroStrategy also lines up with the first half of October. So that's the two most likely times. And then the other two charts that I would point to are a couple of different indicators. There's something called the terminal price. But on this chart, we also have the realized price and the balance price. And you can see that basically every cycle, Bitcoin falls below. First, it'll fall below the realized price, and then eventually it falls below the balance price. You can see that happened in 2011. You can see that it happened in 2015. And then, of course, over here in 2018 and in 2020, and then again in 2022. So there's a good chance that we're going to fall below those prices at some point this year. So maybe whenever we fall below, say, those levels, that could be a time to start thinking about a low being in. But those are just my thoughts, right? It's all just dubious speculation. I absolutely think it was the easy time to be a bear was the first 50% drop, right? Like that was the easy time to be the bear because, even in 2019, which we've compared to a lot of times, there was a 50% drop before a counter trend rally. So I think the easy time to be a bear has kind of gone on. Like we've kind of seen that already. Getting into the next phase is always the hardest part, right? Because there's a lot of times where Bitcoin will drop and then it'll go sideways for a while, right? And I don't know if we're at the sideways point yet, but that's going to be an even more difficult time. There's going to be a lot of arguing, I think, back and forth as to whether the bottom is it or not, and who knows if it really is. But those are my best guesses as to when and where the bottom might be. Yeah.
So look for a potential bottom in around May, and then potentially again October could be when we start to grind back up again. But yeah, as you say, it's that dreaded sideways market that really gets people, isn't it?
Yeah.
Rob, is there anything you want to add to that about where you feel we might bottom, when you think things may begin to improve, or are you kind of with Ben on this one? What are your thoughts?
Nope, sounds good. No, I'm just kidding. So I'll do one thing just to piggyback on what Ben said. First of all, when he says the first 50% drop, I can hear everybody going, eesh, the first 50%. I guess Lynn Alden was right. Nothing stops this train. It's a pain train. And it's going to be painful the rest of this year. I'm sorry to tell everybody, that's just pretty much how it's going to be. But if the only thing I can add this, it was a great assessment by Ben, is when he talked about we don't have a monopoly on the 4-year cycles, and he's right. If you can just throw this up real quick about the S&P 500 and elections. We're in a midterm election year here in the United States. It's going to be brutal. I think the Democrats will probably win back the House. And after that happens, who knows? Impeachment might actually happen. I don't know. But I will tell you, though, that just for one glimmer of hope, these are midterm election years. You can see how it goes down. It just happens over the last 50 years or so. But as a reminder, the post-midterm year, as far as the stock market returns, actually increases the next year. So if you're worried about this year, again, like we talked about for quite some time, it's good to accumulate and go from there. And one more thing to piggyback on what Ben said, he did such a great job, was to make things easier, not so much mental gymnastics. It makes things very difficult, especially for me. I'm an ignoramus. I need things to be simplified. So if we take a look at these weekly moving average, why don't we just do this? Like I use the risk factors as well. But these weekly moving averages, this is the 200-week moving average. You can see how close we are. But look at this. If we just put in this 250, 300, and 350, I know people always like to talk about the 200-week moving average, about how far it could go down. But as a reminder, I mean, not too long ago, we did go below the 200, then the 250, and I think we even went below the 300-week moving average. So if you just look at it like that and go, that's what I'm going to buy. Maybe just use something like that to make things simple. But that's just what when taking a look at, and even the risk factors, it kind of makes things as easy as you possibly can. Or you can go to Ben's website and get a bunch more information. But that's what I'm looking at right now.
Absolutely. Thank you, guys. Yeah, it is going to be a tough year. I think there's no getting away from that. One of those years to sort of consolidate, keep learning, and maybe spend some more time on your other hobbies. I think that might be the best advice I can give. Okay, let's move on, because Mike Novogratz has had some interesting stuff to say recently. He said just yesterday, I think it was, that the age where people buy crypto for huge, quick gains is coming to an end. He says he says the hype traders are kind of being replaced by more risk-averse investors. And the quote I'll lift a quote here, quote, "It's going to be real-world assets with much lower returns." So I wanted to see what you guys made of this. Do you think, first of all, that the age of quick gains in crypto is over? And are all investors just going to be looking for sort of lower risk and lower return options going forward? Rob, as you were just talking, can you start us off on this one?
Yeah, I will say that I don't think we're going to see like the altcoin season like we said before. I think it'll be much more strategic, especially the ones that actually work. My personal ones are the best: Binance, Ethereum, Solana, Tron. If you're just taking a look at Tether and USDC for stablecoin, those are the rails. But I like Mike. I like what he's done. But am I going to take advice from a guy who's got a Luna tattoo on his left shoulder after he invested massively in Luna, which collapsed? No. And I'm going to tell you like this: I hate price prediction. I think they're worthless. They're all worthless. I like to, just point this out because I used to listen to the same thing. Mike here may be right, but look at all the price predictions that have gone through. March 2021, it'll be Bitcoin by the 100K by the end of the year. And then you got Anthony Pompliano, pretty confident Bitcoin hits 100K by in 2021. That didn't happen. Max Kaiser, 220,000 in 2021. And these are the shining lights, I mean, if you can say it like that, for the financial part of Bitcoin. And you're going to see, like, these are smart people. Dan Moorhead says 115K by August. That was in March 2021. So the same thing in April. Kathy Wood, same. And I think we know this guy here, Banana Zone. Tim Draper, 250,000. He said that in 2018, 2020, 2023, 2025. And again, super smart guy. Michael Vandepop actually nailed a pretty good job in December 2020, saying that he's going to target 70,000 by end of 2021. And then in 2021, he goes, okay, the next cycle point for this crypto will be 2022 and 23. So even if you get one part right, you get the other part wrong. And then let's look at this buffoon. This guy, he made some horrible price predictions. And here they all are right here. So like when we're talking about price predictions of things that are going on, you can't get behind it. And even though Novogratz is a smart guy and he thinks that it could be right, but just take a look at gold. Gold's been around since, well, the planet's been around. And I know people will talk about, well, gold is pretty stable. Well, it had a pretty good run. Why was there such a good run? Was it because of the People's Bank of China buying up gold in tons? They did that in 2021, 2022, and 2023. They actually reduced their amount in 2024 and 5. but they've been consistent in buying gold. So what moved it? Well, as far as like tons go, they own a ton, as you can see. As far as China, 2,304 tons. The United States owns the most. Germany owns the most. So the question is, what moves it? And does that mean that gold won't ever go up or Bitcoin won't ever go up? No, it comes down to retail. And we're going to question about this coming later. If anybody gets quizzed on this, or your gold bug friends, like I got a couple of brothers who love gold and silver, just remind them like this. It's not the central banks. It's not the tech and industry that is moving gold. It's retail. Retail lined up. They bought a bunch of gold. And you can see right here, it's only 6 to 7. Actually, it's like 15, 20, 23% or so of what gold is actually used for, as opposed to people going, oh, it's all for tech and industry and central banks. No, it's not. It's people wearing gold. It's investment in ETFs. It's futures. It's equity. It's all these things. And that's what moved the price. So retail can move the price when they get interested. It's just right now, nobody's interested in Bitcoin and a lot of altcoins because they got screwed over. And that's where we're at right now.
Thank you, Rob. Yeah. It does feel like interest in Bitcoin and sort of wider crypto has really created. Well, and we'll talk about that in more detail in a bit. But first, can I push that question over to you, Ben, as well? I mean, do you think the era of quick gains in crypto is ending, or is it over? Are traders becoming investors becoming more risk averse, or do you think there'll always be kind of hype traders around looking to go full degen?
I mean, there's always going to be, the gambling industry is always going to be there. I just hate that this cycle, it just seemed like the gambling industry and crypto were more or less the same thing. I think that's kind of the hard thing we have to fight against is like, hey, there's more to crypto than just, the altcoin casino, the meme coin stuff. No, but I actually still think there could be some good gains in future cycles. I mean, even this cycle, Bitcoin went up 8x. I would certainly be more bullish on the altcoin market next cycle if if we can really get all the excess, all the garbage gone, right? Like if that's the way the industry matures is, we actually focus on developing a few different we actually focus on developing real things rather than pretending like meme coins are the only thing that can come out of the industry, right? That's the hard part right now, is changing people's perception of like what crypto even is. So I think we can have good gains in the future. I just think that's more than likely not going to be this year. I think it'll probably be like next year, maybe in future years. But I think, really, I think since 2025 began, I think the crypto industry as a whole has been going through a cleansing. And it wasn't as obvious to everyone last year because Bitcoin was still technically going up as the year went on. But now that you look back, you can see that Bitcoin really didn't go anywhere last year. It was basically just right above 100K for the entire year. And now it's going down. And now you can kind of see how weak the altcoin market was last year. It was just Bitcoin was hiding it. So I think we have a nice cleansing from last year into this year. And then hopefully things can start looking a little bit better next year. But every cycle, I even remember after the 2017 cycle was over, people said that like that was the last time you ever make great gains in the altcoin market or in Bitcoin. And then look at what happened in 2020 and 2021. I mean, everything changed, and then people said the same thing in 2021, and that has been true so far. But we've also been in sort of a monetary policy regime that was really similar to 2019 for the last 3 years. And back then, we also saw similar conditions as today. Just today, it's been on a much grander time scale. So I think the good times can come back eventually. I just think that, it's going to take some time and some pain to get there.
Yeah, you're right. And I mean, I think as far as, in terms of this idea of are there going to be people looking for sort of easy gains? I mean, I think that there always are. There's always going to be that class of investor, if you can even call them that. And I guess the problem that we've had is that, crypto has been very much associated with that in recent times. That kind of gave birth to meme coins and the whole idea of the crypto casino. But I guess the problem now, in terms of inflows, in terms of money entering the market, those people who are chasing ridiculous gains, there's so many options for them. I mean, as you alluded to, Ben, there's the gambling industry. There's casinos, and kind of crypto and gambling has that uncomfortable overlap. There's a big sort of crypto and in fact, when Bitcoin first appeared, I think one of the first ever things that you could do with Bitcoin was Satoshi Dice, which was basically a gambling site, which I think, if I remember rightly, was Eric Voorhees, who that was something he came up with. So I think that the link between crypto and gambling has always been there. The problem for crypto now is that there are so many other ways that people can gamble, and of course, in a way, crypto's kind of manufactured. Crypto has come up with two of those ways itself, because we now have prediction markets, the likes of Polymarket coming up, that kind of crypto and gambling crossover. And we also have perps, which we've talked about a bit as well. I saw a few people mentioning Hyperliquid in the comments. Crypto, if you're after potential massive gains, then perps are very tempting for a lot of people. Of course, it's very easy. It's much easier to lose all your money than make anything with perps. But I guess that caters to those people who are willing to do that and are just want to try and catch a 500x for whatever reason that might be. I want to kind of lead on from that question, because I guess you guys, I'm sure, either saw. I don't know if either of you watched the Super Bowl on Sunday. But obviously, a lot of people, it's kind of sad now, isn't it? The way people talk about the ads at the Super Bowl as though they're a thing as well, but apparently they are. And one of them was an ad for Coinbase, which I think featured the sort of, a Backstreet Boys karaoke, and only kind of the Coinbase logo only appeared at the end, at which point there's lots of footage of people sort of loudly booing it, which was a real sort of, for me, when I saw that on Monday morning, that was a real sort of head in hands moment, because you're just like, wow, people hate us. People hate crypto. It's like they're booing a Coinbase advert. I mean, Jesus. So, there's a lot to be done to rehabilitate this crypto's reputation. So, what is there as an industry that we can do to change perception? I say we, I'm talking about sort of the wider crypto industry itself, of which we are, we have shackled ourselves to. But is there stuff that crypto itself can do? And can we still get new people interested? Can we still get new retail people to come and not only invest, but also get interested in it? Or is this something that's kind of out of our hands? Rob, what do you think?
No, I mean, and we've all three been talking about this for quite some time, which is, hey, we have to clean up the industry. We have to get rid of all this nonsense that doesn't work. There are 10 bajillion tokens, and they're 99.9% worthless. Let's get rid of them, and then have those developers, whatever they're doing, fold into the actual projects that actually do good things and expand from there. It worked out pretty well for Meta. Worked out pretty well for Amazon and all the different companies where they just collapse into the big fold. And another thing is, once we get that done, we need to get something in there that actually works and does stuff and has real utility. And Guy, you said this 7, 8, 9 months ago, I can't remember. And you said that the next big push for crypto will be payments. And I was like, okay. And I took a look at it, and like I've asked some of my friends who actually own small businesses and say, hey, wouldn't it be nice to not have MasterCard and Visa transactions at 3%? He's like, and everybody said, yeah, we get screwed on all these different fees that we have to do, but we're stuck in the Visa and MasterCard. If we could have something where it goes to like 0.5 to 0.25 or even below, that'd be great. That's the killer use case. You do that, you save businesses money, businesses are happy, they can actually have more money to spend. You can say there's a real use case for it, and then kind of go from there. Bitcoin store of value and everything else. I mean, sure, great, but let's get payments. And then before I hand over to Ben, I just got to say, I took a look at Satoshi Dice, the website, and I'm like, oh, this looks pretty cool. And it's actually up, satoshdice.com. But guess what it accepts? Bitcoin Cash. So congratulations, Bitcoin Cash.
Oh dear, that's the moment. That's the moment it all went wrong. Gosh, yes, I didn't know that. Maybe Roger Ver bought it off Eric Voorhees, or maybe it was Roger Ver. Was it Roger Ver? I don't know. My Bitcoin. I need to go and brush up on my Bitcoin history. Ben, same question to you. What can the crypto industry itself do to, I guess, rehabilitate itself?
I mean, just create more useful products. Think about how long AI has been around. It's only been around a few years, and not like everyone uses it. Crypto has been around for 16 years, and most people I know in the real world don't care to use it, don't want to use it, don't even know how to use it, don't even know why they should use it. You know, like that's the problem. I mean, that is the heart of the problem, is that there's really not a killer use case for a lot of the industry. It's just, as I say, like, it's just dubious speculation. It's the promise of future development, and in this cycle, it felt like the promise of future development all but evaporated because we just focused on ETFs and strategic reserves and meme coins. Basically, the entire cycle was more so built around how do we get more money into the space, not how do we actually attract, like not how do we actually make the industry better. How do we make this stuff better? Think about AI. You know, they've been every month I see like a new model that comes out. Like they're trying to improve. They're trying to improve things, right? If you build a product that everyone finds useful, the money will come, right? Like the money will come. You don't have to chase it through the form of ETFs and trying to convince governments to buy it, right? You just create the product that everyone wants to use, and then that's what ultimately will solve a lot of these issues. But we haven't had that, right? And I've said that many, many times. We haven't had that at all. I also think that as an industry, we don't really respect ourselves. And I've put out some controversial tweets recently about that. Basically saying that, like, you know, if it's not just any one person, right? Like if an exchange is going to, if an exchange has Bitcoin and someone then goes to the exchange to buy Bitcoin, and then below Bitcoin, they see 20 different Inu, meme coin, garbage, like that kind of stuff. Like it's going to make you think that Bitcoin is not that different from those other things. And it's hard to like have a compelling argument with people, like with people who aren't interested in crypto, as to why there's such a huge difference when that's all they're used to. They're used to doing is getting rug pulled by everything they buy. So I think one thing we could do, exchanges could not list all this garbage onto their platform. I know, like, I know the argument is accessibility, like they just want everything to be accessible, but I don't really buy that argument, right? If you're a decentralized exchange, it's not like you have this branding, this custodial aspect of your brand where you're basically, you're not saying it, but you're intrinsically providing your stamp of approval. Like everyone knows with a decentralized exchange, there's no custody, right? There's no stamp of approval just because it's there. But with a centralized exchange, you do somehow have that intrinsic stamp of approval. You can't expect institutions to use your platform and buy certain assets while also just flooding the exchange with all the useless garbage that the space puts out there. And I think that's a big thing. And imagine the argument if we were to extend it. Like imagine if Fidelity or other major brokerages, imagine if they felt like they had to list every garbage thing that was ever created just in the name of accessibility, right? Like that would be absolutely ridiculous. It's not like Fidelity feels like they have to go list every single meme coin just because it's trading on some decentralized exchange somewhere. Like that doesn't really make a whole lot of sense. And so I think that I think the real reason that they list these projects it's not because of accessibility. It's because they want to cash in on trading fees that are coming from the short-term interest in those meme coins. And then what usually happens is that a lot of them are quietly delisted a year later, and when no one cares about them anymore. So I think exchanges could have more integrity and lists, and it's not just any exchange. I mean, it's practically all of them at this point. Exchanges can have a lot more integrity, maybe not all, but exchanges can have a lot more integrity, and only list those coins that seem to potentially have some use. I think there needs to be some barrier. And then I think KOLs could do a better job of not promoting the garbage. I think that's a big thing. And retail investors could do a better job of not buying the garbage, right? So, and not showing attention to the celebrity meme coins. Imagine if when Trump launched the meme coin, if no one bought it, if literally everyone just, like, that would have been a sign of a very healthy economy, like if no one bought it. But because everyone, I mean, if you guys remember, that ended up being the local top for several months, right? And then we only went a little bit higher later on. So I think that these are all things that we have to figure out as an industry. We have to create useful products. We have to stop shilling the garbage, the most garbage of altcoins, and retail needs to stop buying them. And I mean, if we can do that, I think we can improve our image. But I honestly think where the industry is going through a maturing process of kind of like cutting off all the excess so that the core stuff can be healthy again, right? It's like when you have a tree, sometimes you have to trim the bad branches of the tree to keep the tree healthy and so that it can survive over a long period of time. So I think we're kind of in that phase where we have to trim back the garbage so that the rest of the asset class can survive.
Here, absolutely. And yes, building on what you were saying earlier, Ben, as well, and you, Rob, it's like, I think crypto it needs to be more useful to more people. And AI is a great example. AI came along and it was like, well, here's a product, and people wanted to use it. And it's the same with social media as well. Something which a lot of people consider crypto to be evil. To be the worst thing ever. I don't agree. Although in its worst iterations, it comes pretty close. But consider something like social media, which I genuinely think is one of the worst things to happen to humanity in a very long time. I think it's garbage. And I think but social media offered a product that people wanted to use, in spite of themselves. I remember when Facebook came out, and I was like, "This is amazing." I really, I was so impressed. I was like, "This is an incredible thing." And it took me a while to realize that actually it was horrible garbage. And to be fair, I think I think these things all started with good intentions, and then if you're familiar with the enshittification process that Cory Doctorow and others have talked about, the fact that these products get gradually worse over time, for a variety of reasons. But social media has certainly become. I think it was begun with the best intentions and has become this monstrous thing that it is today. But it did offer something that people wanted, and crypto doesn't really do that. Like I've said before, there are good projects out there. There are some useful things, and I think that we need to do a better job of bringing those forward and just kind of letting people use. I guess it's a case of show don't tell, isn't it? Bring out products that people want to use. I think people are kind of sick of hearing about the thinking behind crypto, the idea of decentralization, the idea of the sovereign individual and self-custody. We've banged that drum for so long, and I just don't think the majority of people care, or the message just doesn't get through. So the message has to get through via these products that people find themselves using, and then they go, "Oh, wow, okay, this is actually really cool." And they find out it's powered by crypto in the back end, and they're not so fussed because it's cool and it works. That, I think, is how we win. or at least how we start to win.
Yeah, and I'll just say the market eventually will decide the winners and the losers, and it's already being pruned out right now, which is going to take some time. And just like what we just talked about, it's just going to, take this year, and it's going to be a rough year.
Yeah. I want to. I just want to draw your attention to something that I saw. I think it was yesterday. I think this is really interesting. If you're, talking about crypto becoming useful. Let me just share my screen here. This was an announcement yesterday that I saw in the blog. Stripe, which is currently looking to get a higher valuation of $140 billion, has added the X402 integration. If people aren't familiar with this, I have chewed you guys' ears off about this before. This is Coinbase's open source protocol that basically makes it possible for AI agents to execute sort of micropayments, and Stripe has now integrated this. So, the era of agentic commerce, the era of AI agents transacting on chain using crypto and using, as you'll see there, USDC, using stablecoins is upon us. And in actual fact, interestingly, CoinGecko has just added this as well. So any AI agents that now visit CoinGecko in order to get data will be given the option to pay for that data in USDC. And this is the sort of thing, it's kind of tied in with that payments thing that you mentioned earlier, Rob. The problem is it's quite dull, isn't it? It's just like, payments, great. Stablecoins, great. But, you're not going to get 100x on the stablecoin. But this, I think, is the way we win. It's like we become, as Ben said, we get rid of it. We take the rubbish out. But at the same time, we give people something that they can use.
Yeah, and let me just piggyback on what you said, because people are looking at like an API integration, and for payment, like who the heck cares about that? I'll give you a prime example. We used Gemini Gem, which is an AI from Google, and we make this. It was a crypto report that you could do, and one of the things that it would do every day was send you the moving averages. Unfortunately, the data that it would collect on the internet was always wrong. So what I could do is I could do an API integration to Ben's website and actually pull that data from there. The thing is, though, that it's a paid website. But what if you could do this? Instead of paying for a monthly, you could have Ben's website, use an API integration for just that one person, and just say, hey, we want to use a microtransaction just to get these 2 pieces of data or these 4 pieces of data, whatever else it is, pull that funds through, and then you're doing that, but extrapolate that by 1,000, 10,000, 100,000 individuals paying fractions of so much cents or a penny or whatever else it is. Before you know it, that's a big cash cow for these different companies. And it's the same thing that's going to happen, I think, across the board. No one wants to pay $10,000 or $1,000 for massive API integration. But what if you could just do that as an individual? Where do you do that? You have to have these USDC micropayments. I think it's a next big thing.
Yeah, I think so too. It's, and again, this is something that we can show people and go, look, you're using crypto already. It's not that bad, and I think it can genuinely be useful and not just extractive, which I think is the way a lot of people feel about crypto. But let's move on and talk about AI a bit more generally as well, because obviously this is where the momentum is at the moment. I want to just talk about the spending frenzy that has been going on, and just hit you with this. So it's currently estimated that this year, AI spending from 4 companies, just 4 companies, is expected to be 2.1% of US GDP. And just to give you some context, that is 10 times greater than the moon landings as a percentage of GDP were. So, objective, not just adjusted for inflation, but objectively more money is going into what I guess you could call the race towards AGI than was put towards the moon landings. So the question is this sustainable? How long can this go on for? Is this a bubble? Is this going to pop soon? What do you guys think, Ben?
Yeah, I mean, it's always hard to know. I mean, I don't think the valuations are nearly as extreme as they were in the dot-com era. Like if you look at the PE ratios back then, they were a lot higher in general than they are today. So I don't think things are as crazy as they were back then. Um, if you look at the S&P against gold, that's currently breaking down, and it kind of reminds me of, for years, like, you know how for years we talked about how altcoins were bleeding to Bitcoin.
Mhm.
Now it feels like the discussion is more like, well, now stocks are bleeding to gold, right? Like, yeah, stocks are going up and they're sitting at all-time highs, just like there was a lot of altcoins that were sitting at all-time highs. Maybe not a lot, but a few. But then the minute the blue chip turns, that's when you see the weakness, the underlying weakness. And so I do think that there are some elements of being in a bubble, but that doesn't always mean you have to have like 80% crashes, right? Like sometimes you get 20% drops or 30 or 40%. Like it's not always this thing that has to play out over, say, 20 years or something. So I do think assets are elevated. Like I think their prices are currently elevated, and I think it would make sense for the stock market to have a correction this year, like it did in 2022, like it did in 2018. Midterm years tend to be the worst years for stocks. So I think valuations are elevated, and I would feel much more comfortable if valuations, would come down for a little bit. But I think practically the way I've played this is I've put less money into domestic index funds the last 6-12 months, and more so have focused on international, in fact, because it just seems like they're a better risk reward play for the time being. And with all the uncertainty going on in the United States, there's a lot of it. It just seems like long term I'll never bet against the United States, but in the short term, it's hard to imagine that there's not going to be some type of price to pay for all this uncertainty that's been building up. So yeah, I mean, are we in an AI bubble? I mean, we certainly could be, but no one knows when those things are going to pop. And every time I look at AI, I just see improvements. Like I see one improvement after another. Maybe the bubble pops when AI stops improving. Maybe we reach some like level that there's, from that level, like we don't see the immediate way to improve. But every few months, it just seems like it gets a lot better. Like in 2022, I looked at it and I was like, this is a joke. Like it can't even, like it couldn't do anything right. And then it was better in 2023, and then even better in 2024. And now it's 2026. And like, I feel like a lot of the people I know use it every day. So yeah, I mean, there'll probably be a pop at some point in the bubble, but we could have a correction maybe before, like it doesn't, just because you have a 10% correction or a 20% correction doesn't mean you're having some type of massive pop in an AI bubble. So I think, to summarize, I think valuations are elevated. Hopefully they can come down a little bit this year, and then potentially lead to another bull market in the next cycle.
Yeah. Rob, what about you? Are you worried about the what seems to be insane levels of spending on AI, or do you think this has still got a bit left to run?
Well, I mean, I'll make this quick. My question is, what's the cost of losing the AI race by country? Let's say we cede that to America, cedes that to China, they take over and they rule essentially AI. How's that going to work out for the world dynamics? It's not going to be too good. I think at some point that, yeah, it's a bubble. We can see it. There's that famous chart. You can, let me just share it real quick. Which just takes a look at like OpenAI and Gemini and NVIDIA, and it's just all this money just kind of sloshing around between each and every one of them. And yeah, that'll be bad at some point. Maybe they're, like Ben talked about, it'll probably be a bust. But I think the cost of losing the AI race is so huge, especially if you know what's at stake, that I think the government will eventually subsidize it. And that's just a wacky theory that I have. But I will say, as far as like AI, and like Ben said, my friends use it. Just real quick, everybody in the comment section, do you use AI every day, or at least once a day, or once a week? And how many times have you paid for anything in crypto? Just a quick question. I'm using OpenClaw right now, and I got a Mac Mini to kind of pretty much, thank you, Ben. I appreciate that. I have the Mac Mini, which puts everything into this gated computer. And I'm able to do, and first of all, I ran OpenClaw through the Mac Mini, and I'm able to communicate it through Telegram and tell it what to do. So like right now, like this one, I said, hey, I want you to post for this charity that I work with, this animal shelter. And I want you to find the best posts. I want you to post them on Facebook, Instagram, X, and other socials. Great, do that. And the next thing was, because my Airbnbs, I said, I need you to integrate with Airbnb and VRBO. And if I get a message real late at night, I need you to answer that, especially if they can't find a way to get in, because if they can't find a way to get in, then they're going to cancel their reservation. Right there, that saves me thousands of dollars per month, because I don't have to pay for some individual person to do that. And once I can do that, then I can just go and do the things. Now, it's not without problems. I've got a nice little thing that I need to do a video about, like all the mess ups that it does. Like Ben said, like there is some screw ups before, but as time goes on, I think this will be the big thing as far as like who can actually use it. I can already see what it's doing now, and there's a bunch of other people using it that can pretty much make their life a heck of a lot easier. So that's where I'm at right here. I can see it happening, but I don't know if it's going to bust or not. I know I'll be using it every single day.
Yeah. Well, just from what people are saying in the comments, I mean, there are a few people who say they don't need it so much, but yeah, I mean, by and large, most people seem to be using it every single day, and some people multiple times a day. And yeah, I mean, I use it multiple times a day, and I'm generally sort of try not to get too sucked into these sorts of things, because I kind of think I'm always wary about becoming a bit too dependent on something, on some new technology, because I'm very conscious of how much of the day I spend on my phone, and it's just like, oh God, I need to engage with the world more. And using AI just doesn't seem like doing that, but it's so damn useful. It's so efficient, or it makes me so much more efficient, and so many other people I'm talking to about it. But then, okay, so for the final question, then let's stick with this. But if you guys were to replace yourselves on your channel with an AI avatar, is there what's the one personality quirk or catchphrase or just unique idiosyncrasy to you that you think the AI would struggle to replicate? Is there any particular part of you that you think the AI is going to struggle with? Ben?
How do you know we haven't already replaced ourselves?
Exactly.
That's the sort of thing Claude would say.
I don't know. I mean, I honestly feel like it's pretty good at a lot of things. I mean, maybe I don't know if it would always understand like the sarcasm and like what I say. Like if I say like I'm not talking about your altcoin, like I wonder if it would be like, okay, like he's not, but like Rob, please have a seat. I was talking about Rob's altcoin, even though I didn't explicitly say it. So I wonder if AI would pick up on subtle things like that, or if it would just kind of like read what's written in the voice, or read what they thinks it needs to say. I just think like, oh, that's what he means. He's not talking about your alt, but like, please have a seat. Maybe I was.
The AI's sort of general kind of eager to please attitude doesn't really gel with you, Ben. I think they're going to need to rework the models.
Yeah, it'd be like, oh no, like that's a good idea. You should launch that meme coin, like no.
Great idea.
Yeah, like imagine doing an AMA or something, and everyone's asking for like advice on what they should launch. The AI would be way too supportive, and I think AI is way more empathetic than I am.
Yeah.
or it could go the opposite way, Ben. You could tell it like, okay, be very strict and very pragmatic when you're talking about meme coins, and maybe it just goes like the exact opposite directions. Like, you're a moron, you're an idiot, don't ever do that. Get off my channel. I hate your guts.
Yeah.
Rob, same question to you. Are there any aspects of Rob that you think the AI would struggle with?
The human element. There's a bunch of AI avatars right now doing YouTube videos. And there's a famous one that looks like Elon Musk on a green screen. And he's got like 400,000 subscribers and they get like 100,000 views every day. I think that there's just one part that it doesn't have, which is it never has that human element. And I think as time goes on, we get more and more into AI, more into socials, and more on screens, even more than we are now. I think people will miss that human part of it. So there's always going to be that, I think.
Yeah, I found weirdly we've tried running getting AI to replicate my voice a few times, just to see how well it works. I mean, it does a reasonable job. I found it does struggle with voices a little bit. For some reason, every single AI we try with my voice makes me sound more like I'm from London, because I'm from London. I was born and bred in London, but I don't have a very London accent. It's quite. I think most British people would say it's probably quite difficult to tell exactly where I come from, other than sort of, south of England. But for some reason, the AI makes me sound a bit more London, which is weird. Someone raised a really good. I don't know if they meant to raise this particular point, but it did make me wonder reading that. It's like, well, we talk about AI trying to replicate humans and struggling with that, succeeding in parts. I wonder if there's a danger that as AI becomes more and more intertwined with us, us humans start sounding more like AI. And at that point, that's when it's going to become impossible to tell us apart, because we've met AI halfway. So I don't know, like an example would be, are people going to start talking? Is conversation between humans going to become more like what it might be between a human and an LLM? That's a great idea, Ben. Ben, that's such a great comment. Thanks for that. I appreciate that. Well, let me think. Are we going to make it easy for the AI rather than the AI sounding like that, like us? Are we going to end up sounding like the AI? And because I was just reading an article before we came on the stream, apparently more and more people, especially young people, are using AI companions rather than going out and meeting young people like themselves and doing whatever it is young people get up to. So I wonder whether, in actual fact, we're thinking about this the wrong way round. We should be more worried about us sounding like AI than AI sounding like us.
Have you seen the ChatGPT meme where it's like there's this guy in the hospital bed and the ChatGPT like robot is like, oh, you're right, but he's already the robot has already done the surgery, and he's like, oh, you're right, my mistake, your appendix is on the other side of your body. This guy already has like a massive
Yeah.
I mean, even today with like email threads, like when I'm reading certain email threads, it feels like I'm just looking at two AI things like just talk back to each other. It doesn't even sound like human anymore half the time.
Yeah. Well, of course, one of the things with AI agents, I think, is one of the things I've heard discussed is that if we start having AI agents as sort of personal assistants, then AI agent we'll give our personal assistant AI access to our email. It'll start replying to our emails on our behalf. Meanwhile, the person we're corresponding with, their AI is replying to them. So the question then becomes, well, what are we going to do? And at that point, that's when the AI goes, hang on a sec.
Did you see Did you see the tweet yesterday? This guy, I guess they use Facebook Marketplace, which is something I've never used. But there was this thing on Twitter, and it is still called Twitter. And it basically said that this guy put this like AI agent or something in charge of his like Facebook account to try to sell something. And the guy trying to sell, he offered it to this person who reached out. He just said, "Oh, do you want it for free?" I I just thought it was funny. I'm like, how do we like the AI agent is like just too nice sometimes.
Yeah.
Which is not really the way business normally works. Like, normally it's more of a cutthroat thing.
Yeah. Well, maybe that is going to be our defense against the AIs, because they just cannot replicate what absolute bastards we can be to each other on a regular basis. So, maybe one of our least attractive human qualities is going to be what saves us in the end, because the AIs will always be visible because they're so too damn polite for their own good.
Yeah. Or maybe that's a new job opportunity. Someone who's in charge of 1,000 AI agents, make sure that they're all don't screw up. That'd be the new job.
Yeah.
There was actually some jobs. I saw some jobs were created recently. Someone made a website where AI agents could employ humans. Like they would need a human to go somewhere and do something. Like, hey, go to this restaurant and try the food and let me know how it is. So the AI agent can like make a review about it. Like, so it's almost like AI is, as we talked about a few years ago, like it might lead to the death of some jobs, but it could also create other jobs.
Yeah, absolutely. There will be people whose sole job is to either work with AI or perhaps work for AI. And it does. Yeah, I like. We'll finish off with this comment because I do like it, because I look at my dad, who has just started using WhatsApp and has somehow managed to put it. Somehow his messages contain sort of Swedish characters. I don't know how he's done that. I don't know if that's even possible. But it does scare me a little bit. The more and more technology gets accomplished. What am I going to be absolutely useless at in the future? Am I not going to be able to use my AI killbot to its full extent?
This is why you need to own assets, Guy. Because in the future, who knows if we're all going to have a job?
Yeah, absolutely. Well, there we are, folks. It's not financial advice, but you might want to think about owning assets. Rob, Ben, this was a great conversation. Thank you very much. It's great to see you again. We next week, I think we will be back. Guy will be on Ben's channel. So until then, thank you for joining. Thank you everyone for watching, and we'll see you again soon.
See ya.
Bye everyone.
Bye.